Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. Expect the best. Believe something good is going to happen, and it usually does. Market wise, let's take a look at it out here. We had the Dow finish down 167, Nasdaq off 45, S&P's down 20, gold contract down $4.30, trading at 1,103 an ounce. Now, what you have with gold is this. Gold goes topside, has wide price spread, has volume, all of the above, Tuesday, Wednesday, Thursday, pulls back today with lighter volume. Gold wants to run up to the 1192 area. Silver down 40 cents today, $13.94. Silver's a problem. Silver did go higher yesterday with volume, gives it up today with volume. Bottom line, silver's going to get over $14 once again. Platinum up $2, $8.79 an ounce. Copper $2.01 a pound. Light sweet crude, problem child out here, no doubt. Down 37 cents, $32.90 at broker B point. Wednesday, broker with volume, wide price spread. Price projection, $28.25. And it's pretty amazing, folks. But I suspect what you're going to see when you get a break of 30, just psychologically a break of 30 in the oil market is just absolutely wild. No doubt. Right, Dave?
It is. And I remember, like on air once, saying that one of the cardinal rules of commodities is they'll go to some kind of astronomical price.
Yep.
And then they'll come right back to where they started from. In this case, even lower. But I remember, I think at 150 bucks, I said to somebody, I said, well, this thing really kind of took off at 48 bucks. So eventually, it's probably going to come back down to 48 bucks. I think this was when it was like 150.
And crazy.
People were telling me I'm nuts. I didn't know when it was going to come back, but normally they go to super prices and everybody starts pumping. Right, in the case of crude, and then at the point that everybody goes out of business, and they can start making money again.
And in this case, the oil market, it is phenomenal, folks, okay? So, you know, you had the $35.40. That was the high volume swing low from 09 that, you know, I felt was going to get tested. Bottom line, blows through it, does an ABC structure on the way down. And even, you know, we know these ABCs, when they break with volume, they're pretty good. You know, your probability is pretty good you're going to get it. But psychologically, it's still wild because I'm saying to myself, okay, so 28.20, you know, and we start hearing like $20 oil, folks, about 2.5 months ago. And I was saying, $20 oil, man, that seems so whacked up.
The lowest I've heard so far is now 10.
10, oh my God. Well, I remember when I had the offices up in Alaska, I remember $10 oil. That was in the 80s. And that was a crash, too, by the way, okay? But I can imagine $20 oil now. That's just so weird. You know what I mean?
You don't know if it's going to get there, but you could think that there's enough reasons to get there.
Before it was unimaginable.
Right.
You know, now it's like, okay, we know markets well enough that if the 1-to-1 ABC structure is 28.20, well, guess what? That's just a 1-to-1 structure, folks, okay? And, you know, it can do a lot more than that.
So when crude was 80, would you say that we're maybe in the stock market at the same mentality, that there's no thought that it could go to 30? Is that kind of like where we're at right now, where we're at whatever, 1920 on the S&P cash? Does no one really believe that we could go to some imaginably low number now? I think they do. I think they are all thinking that it's going to go a little lower, and they're going to buy it, and it's going to bounce.
Personally, I think the stock market could go a lot lower.
Yeah.
And I have an easier time understanding stocks than how oil can, you know, go to from even 30 to 120 back to 30. It's like,
yeah.
You know, I can understand the equities because of the fact that you can group them together. There's like, you know, they're oversold. Overbought in a huge way, and it seems that it always happens, but it always happens in commodities too.
Yeah, but it's kind of the same idea. There's no way. It's no way that it's imaginable that in 2009 that we would have gone to the levels we have. Same way, there's no imagination that lets us think about how much the downside really could be. We think of it in a little bit, but we can't think of the big bunk.
So picture this number is a big number, folks, and bottom line, put your stops in, and you can make the argument that, hey, if I had stops in, in the past they get stopped out. Well, it's hard to make that argument for the last 6 years because the market went up. This has been the largest run, the second largest run in history for a bull market in the equity market, not as a bull market. I heard this stat, and not as a bull market. The largest run I've ever seen is that, it's bonds. Bonds,
I do have to give you a compliment, and this compliment goes back to maybe 2000. And that is, you said, and I was trading maybe 2 years at the time, full time, that until you go through a few cycles, you really don't understand it. That everybody can tell you, but you're not going to see it until you've been through a few of these cycles. And the problem is that no one's been in through one of these cycles since March of 2009. So we've got a lot of traders out there with experience of a market that only moves up.
Well, and so watch what you have. There's no doubt, and thank you. But what you have also here, now this is going to be a phenomenon that's going to be pretty weird, folks, okay? And this is what it is. You've read about all these hedge funds that are closing, okay? Well, you get a picture of something. The business that we're in, the money-running business, we're not in the money-running business, but the hedge funds are. It's a very young business, okay? You get some of the brightest young men and young women, running money. Well, they've never seen a bear market because, we've been in a bull market now for 7 years, okay? That's the first part. The second part is more intense, though, and this is what it is. As you see these funds closing down, which we have, they're closing down. When they close down, folks, they have to sell stock because that's how they close down. And the reason they close down, it's not that they're down 5 or 6%. The reason they close down, folks, is they can't make money anymore. And it doesn't mean they could make money, but it's easier for someone that has a pedigree, education, whether it's a Harvard, MIT, or something like that, to close the fund and then start again. Because what happens on a drawdown is that let's say they're running the $2 billion, and they get 20% of the profits. Well, if a lot of them have lost 16, 17%. Before they can get one more dime, they have to make that 16, 17% and then make it again. That's what's not really being reported. That's why there's so many funds closing down. It's not that they're getting out of the business. They're not. They're going to close that.
Reset.
They're going to reset. They're going to reset, man. And they will get the money again, too, by the way. Now, what happens in that is that's that domino effect. You know what I mean? And that's happening, too. So it's gonna be a wild one. And you're gonna get great bounces out of this, but we can tell you that my take, what my take is. I mean, right before, I've been bearish period, the distribution was going out for a year. This is markdown. And we've been in markdown, really. August might have been the first beginning of markdown. Do you know what I mean? And we get one in between it. This is definitely, the volumes out here are tremendous, So, bottom line, you're gonna get chances to get out of the market, though. That's the bottom line. And the hardest thing is that when you get these bounces, just like the August bounce, I'm sure plenty say, it's going to go up, it's going to go up. You stay right there, folks. Dave and I are coming back. We're going to be talking technology.